Hey guys, Brian here with a few highlights from the letter. And let's just start with this new bond buying tool from the ECB. It's got a new name. It's really the same old story. Investors refuse to purchase certain bonds in the Eurozone. The ECB steps in and buys those bonds on their behalf. Years ago, I argued that there would come a day when Western European governments would refuse to subsidize some of the weaker Eurozone economies. That day is fast approaching. Every one of these schemes has generated lawsuits. This one's going to be the most contentious yet. And so our goal here is really just to nail down timing. When is it most likely that the monetary officials in the Eurozone will simply lose control over the debt markets? That's what we want to kind of nail down in this issue. Another thing I want to highlight is the obvious slowdown in Germany. German companies have been losing a lot of market share. I put together a 2-decade chart illustrating this, and frankly, I was kind of surprised to see how long this trend has been going on. I think the problems we're seeing in Germany relate directly to some of the ECB's previous bond schemes, and so I'll get into what I mean by that and what to look out for in the future. Now, finally, I just want to touch on the pessimism that really developed around the July lows. I show some indicators that really nail down where we are in terms of investor psychology and how that relates to the wave structure. I also just started keeping a list of events, not just in Europe, but around the world that I think relate directly or indirectly to a negative mood trend, to the bear market. A lot of people don't appreciate just how powerfully social mood influences the world around us. It's going to be interesting to come back to this list on occasion. I think it's really going to help us navigate the way forward if this bear market becomes as big or severe as we think it's going to.